Investor appetite for risk is coming back. That's the insight from the very first inaugural launch edition of the quarterly Bloomberg global poll of financial investors and analysts. Michelle has more on this big mouthful of microcosmic data. Michelle, maybe you'll have better luck than I just did.
It's the quarterly Bloomberg Global Poll. Quarterly Bloomberg Global Poll. Well, as you know, that Bloomberg terminal users do have their finger on the financial pulse, and we polled a random sample of over 1,000 Bloomberg subscribers on 6 continents, representing decision makers in markets, finance, and economics. And here are the results of the global poll, Bernie. Well, firstly, most investors are now shaking off the world economic crisis, and many are willing to jump back in the water and take on more risk as they hunt for opportunities, especially in China and India. Overall, 18% say that the world economy is getting back to normal. 35% see more opportunity and are taking a greater risk. 47% are still hunkering down, though. And they singled out stocks and commodities as offering the most promising returns over the next year. The survey shows skepticism about the recovery in the U.S. and in Europe, with 44% of respondents saying that Europe poses the greatest risk for investors and 20% citing the U.S. Now, these financial leaders also predict that the Chinese yuan and the U.S. dollar will appreciate the most over the next year, which suggests that relations between the two countries will remain stable. 25% see the yuan as rising the most, 22% choose the dollar. And as far as inflation concerns, well, investors are downplaying them. About half predict that the 3-month LIBOR rate will not change that much. And some more big picture insight, almost half say that crude oil and gold will be higher in 6 months. 41% of investors say the same of the S&P 500 index. But Bernie, according to our Bloomberg survey, China is where it's at. 70% are optimistic about China's prospects. Bernie?
It's amazing the kind of power that is harnessed through the proprietary Bloomberg professional service, and yours for only $1,500 a month. It pays back dividends beyond its initial costs. Thank you, Michelle. Excellent stuff there. Jeff, happy birthday.
Thanks.
How do you feel, older or wiser?
Well, I thought I'd wake up this morning and maybe feel a bit different, like enlightenment or arthritis, but I feel just the same.
Well, we did get an eclipse today, you know.
Yes, I looked at it.
Very auspicious day today, and it's your birthday as well. So happy birthday, nevertheless, okay? Let's talk a little bit about the survey. I don't know if you've had a chance to actually see it or whether you participated in it. In the interest of full transparency, did you happen to run across it previously?
I wasn't asked to participate, but I just heard the details then, and I'm glad to see that investors are really taking up the Asia story, because we really do believe that the fundamentals on a 3 to 5 year view are so much better than for the Western or advanced economies. So that's something that I would agree with quite strongly.
Interesting. A lot of world shaking off the crisis. Do you think that's? Do you think the world is doing that to their own peril? Maybe. There's plenty of bad news out there that kind of sifts in between the decent stuff, like the sort of halfway decent reporting season we're in right now.
Oh, yes, absolutely. I think it's too soon to declare that the world economy is back to normal. I mean, the IMF forecast for 2010 is 2.5% growth. That's still very, very subdued for the global aggregate. So it's still early days, and I think a lot of the better expectations, better investor feeling is because markets have bounced. If markets correct, then I think that some of that fragility could easily come back. We shouldn't be complacent.
The fact that the BRIC countries, emerging markets, are back in vogue once again, do you think that's more of an offensive strategy or a defensive strategy? Maybe especially Americans are going, geez, this problem is never going to go away. When you had Lehman and Bear, and now we've got CIT on our hands. Man, much better look toward the growth potential of a burgeoning middle class like you get in China or in India.
Well, I think what we've seen now at this point in the year, in contrast to January, is that the larger emerging economies like Brazil, like China, India, have been able to recover ahead of the rest. They haven't suffered as much, and their domestic demand is proving quite vibrant. So investors now have much less doubt compared to earlier in the year. So it's not surprising, I think, that they're really buying the story. Asia is the place where the growth really is. So I think valuations could go above the historic norms.
And interesting, Europe, a big problem, 44%, 20% say the U.S. still a problem. Would you concur with those findings?
We are underweight Europe, and we are also now underweight U.S. large cap, and That's partly because the macroeconomic outlook is particularly uncertain for Europe. I don't think it's going to be quite as long after the U.S. recovering as, say, the IMF or some of these other forecasts. It would be unusual, I think, if Europe was still negative growth first half of next year.
Okay, of course, this all hinges on the hopes that they don't go through some completely Armageddonic kind of a banking crisis. Onward. But wait, before we go for a break, what's going on in your neck of the woods? We want to make an appeal about the buzz in your neighborhood. Send us the most eye-catching headline of your local newspaper, and we'll cover it later on the show today if you can get it in. And if it cracks us up, all the better. Small town news here in Asia Conf, ASIACONF at Bloomberg.net.